Hey, to my real estate agents and MLOs, how many deals have you lost in the 11th hour because the buyer was short on liquid reserves or their reported income wasn't quite enough to satisfy underwriting, as we're here at the end of the Black Wall Street Festival downtown New Haven? Well, what if I told you that the capital that they need to close the deal is already sitting in their current life insurance policy? So, ladies and gentlemen, let's talk about this thing called private reserves. See, under the Fannie Mae guidelines, the vested cash value of a life insurance policy is an acceptable source for liquid financial reserves and funds to close if your client has an actively funded Indexed Universal Life, IUL, or whole life insurance policy. So they can access that cash value for the down payment because they're leveraging their own private reserve through a policy loan. So the policy loan generally isn't going to trigger the same DTI penalties or debt to income penalties as a traditional unsecured or personal loan. So they get the house and you save the deal, coming out looking like the hero. But now, what about your self-employed buyers like you realtors or MLOs or even retirees? The ones who are asset rich but show low reported incomes on their tax returns. Well, Fannie Mae allows asset depletion. So, this means that you can take eligible liquid assets, including the cash value of a life insurance policy, and convert them into a monthly qualifying income stream for the mortgage application. So it fundamentally changes the math on what they can afford. And finally, let's look at collateral assignments. And I want to be precise here. A collateral assignment is not borrowing money. It's using a legacy policy's death benefit or a life insurance policy's death benefit to secure the lender. So now, whether your client is dealing with a private lender, a commercial lender, or a commercial loan, or a hard money lender maybe, or even strict guarantee requirements, assigning a portion of that death benefit to the lender provides the security. So the lender, they know that they'll be made whole. And your client doesn't have to liquidate their hard-earned assets just to prove that they are, in fact, good for the money. So, realtors and mortgage loan originators or mortgage loan officers or mortgage bankers or mortgage brokers, you guys are the experts at getting people into the homes. Well, I'm the expert at structuring the capital that gets them past the underwriter. So, stop letting good deals die on the vine. Let's you and I partner up to add value to your book of business, as obviously as well as mine, and get your clients to that closing table. Salute.